Good afternoon and welcome to this episode number 8 of the RDO Podcast. As always, I'm Jason Von Kennel. This is my brother and co-host Alex Von Kennel. How are you, bro?
I'm good.
Let's get straight into it. It's been a big week. What have you been up to?
I had an interesting week. Because I haven't been very busy, I've gone balls deep back into the crypto space, and there was this massive release.
Did you deliberately wear your glasses this week because you're talking about crypto?
No, because it's so late in the afternoon. We usually do this in the morning.
Yeah.
And I can't see.
Right, that's fair.
So, there was this big worldwide release of this event was happening, and you could put some currency in there, and you sit it in there for a while, and it would pump you basically interest back in the form of a different coin. And there was something like $1.3 billion that all went in one hit. And it literally crippled the system. We had to wait up till 11 o'clock at night. I'm on Facebook groups talking with people that are doing it. It was heaps of fun. And all that work for $100. It was $100.
So just to
Two
share-
late nights, like after midnight. Countless text messages, like $100.
So just to share, because I shared part of the excitement as well. I wasn't actually invested or anything like that, but you called me a few times, especially just after I launched. And
so there was so basically there was a website, and the website had a dashboard. The dashboard showed how much you put in and then how much it was giving you.
Yeah.
And I think I figured out what's happened. Anyway, that figure started like 5.
So just to take a step back on it. So the way that it worked was you staked a certain amount into this thing of a certain type of crypto.
You're providing liquidity to the program.
Yep. And then in return, so you were getting that stake back anyway.
Yep.
But in return, you were essentially getting paid interest on your investment.
Yep.
In the form of a new coin.
Correct.
Called flamingos.
Yes.
Right.
So when I first launched it in like half an hour, it was like 5 flamingo. And then checked an hour later, it was like 10. And it was like 20. And I'm like, oh, that's pretty cool. When I went to bed that night, it was like 50. When I woke up in the morning, I went to work, it was the largest number I've ever seen in my life. I think it was quadrillions.
Yeah.
It was
like 600.
600 quadrillion. And I thought, even if this thing, I'm not a mathematician, even if this thing was worth, if it was worth one token, like 0.000001 was worth 1 cent, I would have been a billionaire.
Yeah.
But I think I figured out it doesn't like it when I'm here in the office. I'm only connected to cell data.
Right.
Because once I went home, connected back up to Wi-Fi, it went 60.
So Alex is calling me during the day, obviously while you're at work, and going, man, this could be huge. This could be huge.
I was skeptical.
I'm going to the moon.
Yeah.
I'm going to the moon. I'm riding my flamingo to the moon.
I'm either a billionaire or I'm not. And I wasn't. About $100.
It was exciting though, right?
It was super exciting.
There was that day when you were saying that you couldn't pull it out until like 3 o'clock, and I was at home getting sweaty too, because I'm like, because I've already retired, but I was thinking it would be a lot more comfortable if you were a quadzillionaire or a godzillionaire.
Yeah, I renamed the level after that because it was going up at such a rate. I thought like 9 decimal points or something is good. After 100 quadzillion, it should be a godzillion.
A godzillion.
1 godzillion.
Yeah. Do you even know what the number is? It might be a godzillion.
No. Well, what's after quad? Pentillion, maybe.
I don't know.
It's Latin.
Someone who does maths, let us
It's
know.
Latin, isn't it? I think so.
Something like that.
Yeah.
So that was a bit of excitement for the week for you.
Yeah, that was my week.
My week's been rough, man. It's been rough. We were talking about this. So I'm super late today, hence the glasses that Alex is wearing. Because
How late?
Probably an hour and a half late.
Yeah.
Just a little bit. But I feel like when you have kids, like, they're your excuse, right? And it was legitimately Nate's fault. Because Nate's going through a thing they call a leap. Now, leaps are one of the things that, as someone who had zero experience with kids, I had no idea they even existed.
I've never heard of it.
No, and
I thought when you said he'd had a leap, I thought you meant he jumped out the window.
Oh, he's pretty close to doing that shit too. I reckon he's about to jump out of his crib soon as well. So what a leap is, for people who don't know, is with babies, they go through periods, especially in the first 12 months, where, as the name suggests, they have a leap forward in cognitive development. So essentially what it means is something's happening inside their brain where I don't know whether it's like more neurons forming or firing or whatever it is, but they go through a period of time where they're just not themselves. They don't sleep, they get really irritable, they get a lot more separation anxiety, like they just want to be held all the time, and it's pretty full on. And when the first one happened, we were like, I don't know what's going on. Like, we thought we had this easy kid, and I was like, I think this kid's broken. Yeah. Like, can we take him back? Because you just go through the list of things that could be. Do you need a change? No. Are you hungry? No. Like, do you just want cuddle? No. Like, there's nothing that we could do to settle him. So, anyway, there's an app again. So, again, parents, if you don't have the apps that show you where the leaps are and stuff like that, get it, because it's one of the other things that probably keeps you sane when you look at the app and you go, okay, he's actually in a leap. He's not like this normally. Right. He's just in a leap. But what is interesting is after the leaps that he's had in the past, whenever he's come out of it and he's just that normal happy kid that everyone knows and loves, it's like he learns a new skill during that time. So like the last leap, when he came out of it, all of a sudden he could sit up all the time.
Right.
Which again doesn't seem like much, but
yeah.
it was a leap. It was a leap. It was a leap forward in development. So anyway, because of that, he hasn't been sleeping well the past few nights, to the point that Amanda and I were up at about 12:30 last night together trying to do the team effort in the room, because normally one person takes the bullet, and more often than not it's Amanda doing it rather than me. So shout out to the wife. But yeah, last night nothing was working. So we're up from probably 12:30, and I think he went to sleep at 4 o'clock. So we're up that entire time. I mean, we didn't move like blankets and pillows and stuff in there, and like we're going to sleep in there. But even us being in the room,
parenting sounds amazing.
Man, when he can start doing jobs around the house and get an income, it'll be worth it. Yeah. It'll all be worth it. Or when he, starts his Formula One career because his uncle funds it, then it'll all be worth it. But no, man, it's been a bit rough. So I'm pretty wrecked today. But luckily I've got a little drinky poo here to help me through it. Yeah. So something else. It's 1st of October, which means I'm starting my Soberish October.
Sober-ish now.
Sober-ish October. So the whole reason why it's sober-ish is because I've got an event coming up where I'm catching up with some friends I haven't seen in a long, long time. So I will be drinking at that event. But apart from that event, dry for the rest of the month to counteract the extra calories that I'll get from that night of drinking, which probably I won't go hard anyway. I'm also having a completely no junk food month. So one of the things that is probably one of my, like when you think about the 7 deadly sins, I've got pretty much all of them, but gluttony is probably my worst.
Yeah, mine too.
I just love junk food. Like I eat a lot of healthy food, but I just love junk food. I love fast food, I love Macca's. If you want the best burger in the world consistently, it's the double quarter pounder with bacon. The best burger in the world when on consistently and for the price.
They're consistent. I get that.
Consistent
McDonald's
price.
is always consistent.
Yes.
But it is shit.
Love it.
It is like you always feel dirty after.
No, you do. I don't. I feel amazing.
No.
I eat that stuff and I'm like, ta-da! Like I feel good. I love it. So
why are you going sober?
As in from the alcohol or from the junk food?
Both. Why?
From both. Number one, because I'm too fat.
Mm-hmm.
Number two, it's just a challenge that I can give myself, because I've gone from being at work and constantly challenged at work to, look, obviously there's the challenges of being a parent too, but it kind of gives me an extra target that I can sort of chase. And pretty much just to give myself a bit of a health boost head start, I guess, for this month.
So you know that I disagree with this technique.
Yeah,
I don't think this is a good idea. I think what you should be challenging yourself to do is have a good diet all the time, because that's a good life choice.
Which I have been doing too, to an extent.
But not enough in an extent.
Not enough.
Extent it.
Yeah, but hey, it's so.
That's a challenge. That's a real challenge.
It's so
because putting the end date on it gives your mind, tells your mind that this, I'm just doing this for a little bit.
No, well,
it'll come back soon.
So here's something I've noticed too, and this is probably more so to do with the drinking thing than anything. So, as we said a couple of weeks ago, so the whole family got a cold a few weeks ago, and whenever I'm sick, I completely cut alcohol, because obviously you don't want to give your body something else to have to contend with while it's trying to deal with whatever it's dealing with. And I cut back caffeine a lot at that point as well. So I think I didn't have a coffee for a week or so, which, I mean, I'm normally caffeined.
Yeah.
I'm going to quote that, caffeined.
Yeah.
Where I normally do double shot first thing in the morning, and when I was working, I was probably double shot at 5:30 in the morning when I woke up, double shot when I got to work, well, a little bit after when I got to work at about sort of 8:30, 9 o'clock, and then I was having another double shot about 2 or 3 o'clock in the afternoon, just to try to keep myself going. So since I left work, I try to make an effort to only have one coffee a day. So I was just having the morning coffee, and I obviously don't need to get up in a same hour now, unless obviously Nate wants to get up. But yeah, anyway, so when we were sick, no booze, and cut back on the caffeine a fair bit. And even though I've been well again for probably at least a week, and normally I drink more in the hotter weather too, because as the weather started heating up lately, normally, you feel like you want to hit the beers and that sort of thing. Been spending a lot of time outside lately, a lot more than usual. Been getting stuck into the gardening. I've done hours of trying to pull these pinties out of the yard too, to try to give myself a head start, and almost set my eyebrows on fire yesterday, as I showed you. But I haven't felt the need to want to go back to drinking, really, which has been really good. So hopefully this month will give me a little challenge. I can have a little bit of fun with it. See if I can drop some weight, obviously, this month as well. So to start it off, I'm 107.5 kilos right now.
Well, let's put a thing on it. So you're 107.9. 0.5. What I want to see is what you are in 3 months' time.
Okay.
I think because that's the real metric.
Right.
It's not because crash diets don't work great. Crash diets don't work.
Alright, so let's make it interesting. So let's go. So 3 months. So 3 months is, call it what, 12 weeks? I'm so sleep deprived. This is not working.
What are we now?
So 3 months is what, is 12 weeks.
Yes.
Ish, right? Even though there's 4.33 weeks in a month, which might be coming back to later on this. We do talk about finance.
Just say the date, the first of what?
But what I'm trying to say is that, so I'm 107 kilos at the moment. I probably shouldn't be over 100. I should probably be more like 95.
Yeah.
Really. So I think a healthy amount of weight for a guy of my size who is a little bit overweight to lose, if you're really trying harder, it's probably about a kilo a week.
Yeah, I agree with that.
Right? So 12 weeks from now, the goal should be to lose 12 kilos, which I'm 107.5, puts me smack bang on 95 kilos.
Yep.
Surely set the challenge.
Yeah, go for it.
So what do I get if I win?
A future. You get to see your son grow up.
No heart disease.
Yeah, that's what you get. That's what you get.
Yeah, no, it's probably a pretty good payoff.
It's the only payoff.
Yeah. All right. So you heard it here first. 12
go.
weeks from now.
What's 3 months from now? What are we now? October.
That's October. So November, December, January. So
is it first?
So it'd be 1st of Feb.
Boom. 2 + 2 is 4. -1, that's 3. Quick maths.
So 1st of February, you're going to be 95 kilos.
It'll be 95 kilos on the 1st of Feb.
Done. Mark it down. Okay,
keep me accountable.
I want to talk about something. So, I read in the paper that the Australian government is thinking about flicking the switch back to what it was like financially, borrowing-wise, to what it was before the global financial crisis, or before the ASIC Royal Review.
The Banking Royal Commission.
The Banking Royal Commission.
So yeah, let's because I saw this as well, and I I thought it was very interesting. So just to, I guess, make it clear, So there was a certain way that lenders could lend money, which led to widespread rorting by lenders and by intermediaries, so people who are able to lend a bank's money, for example, like a car dealership,
Brokers, mortgage brokers,
everyone, which was well and truly exposed.
White labelled lending offices like a Rams or something that's an offshoot of a bank.
Which was exposed during the Banking Royal Commission. And so out of that Royal Commission, there was a lot of changes which were due to be made in legislation, which were made in legislation to change the way that you're able to lend money. And
were they legislated against, or was it a new guideline?
I think it was guidelines came out of the Royal Commission that were due to be legislated, which haven't been.
Right.
Although, because all right,
but it's been rough. It's
been really rough.
So probably don't need to get too technical, but it's been a rough ride, and I can talk from my own personal experience. I tried to refinance my house that I've owned for 10 years, right?
Yeah.
And I couldn't get refinanced because of the new criteria, even though I earned double what I was earning then, and I've paid it down, and it's rented. Everything worked in my favour, except these new rules.
So you'd think that the value of the house should have increased in the time because you've owned it for a long period of time. You paid a significant chunk of your mortgage down. You earn more money, so you should have high capacity, and yet you still weren't able to refinance.
Yeah, I had no debt. It was all property debt.
Yeah. So to get a little bit nerdy on it, because I did finance for the last 2 years really, and the main change to finance at the guts of it is a thing where they've basically gone, it doesn't matter how strong your application is, capacity is king. So what capacity is, how much money do I make, what are my current expenses, what is the difference between those two figures? So if there is a positive difference, that's my payment per month and I can afford to borrow new money against. If it's negative, you can't borrow anything. And where things have gotten tricky in the last 2 years since the Royal Commission is a thing called Household Expenditure Measure, or HEM. So what HEM is a benchmark that most lenders were using to, so when you've got expenses, right? So you've got, let's say, a mortgage, a car loan, and a credit card. Let's say those are your three main expenses. So you've also got general living expenses. So your general living expenses are going to be things like food, health insurance, entertainment, those sorts of things. So what banks and most lenders have traditionally used as a benchmark is this thing called a HEM measure. So to give you an example, my wife and I, it's based on your living situation. So we have 2 adults and 1 child. So what HEM would normally say is whatever your current bills are, so we've got mortgage, car loan, we don't have credit cards, but so we've got those things, and then you add on a HEM benchmark. So for that, most adults are, depending on the lender, about $1,500, and most kids are about $500. So for us, you would have our mortgage, you'd have our car loans, and then you'd add on about $3,500 in general living expenses. Now, where this got tricky was ASIC, so the government body which oversees the financial industry, came through and said, HEM is not an accurate enough way of quantifying people's living expenses. You need to look at the exact expenses. And this is one of the biggest things that shifted in the last 2 years, and it made it really, really difficult to get people finance. Now, what was really, really interesting was that Westpac then took ASIC to the High Court and challenged this. And they used the Wagyu and Shiraz line. And what they said was, ASIC were trying to argue that the fairest way to judge someone's living expenses is to take the exact expenses that they've been spending for the last 3 to 6 months and apply that moving forward. What Westpac, and I agree with, quite rightfully argued, was that if you wanted to buy a car, for example, and up until now you've been eating Wagyu steak and top shelf Shiraz every single night, but you want to buy a car, you're probably going to stop eating the steak and top shelf booze every night because you've got a new bill.
You've got the option to reduce that.
That's right.
If you see
fit. And the thing that, so as someone who's done finance for the last 2 years, the thing that frustrated me the most about it was I had so many people in the exact situation in that you just described. I'll always remember it. I've had clients who would come in who have had a car for 3 years, and they're 3 years into a 5-year loan contract, never missed a repayment, have had promotions at work, so earn more money, have paid their mortgage debt down, so they're in a better off financial position, but cannot trade that vehicle in and finance a cheaper car at a lower repayment, so improving your financial position.
Yep.
But due to capacity and these new HEM requirements, you couldn't do it.
Yeah.
It is insane to me.
So they're talking about ripping that and going back to the old way because to help boost the economy. Now, having been selling cars in 2006 before the global financial crisis, times were great. Times were great. We had a total economic collapse after, but it was super easy, and the onus was almost on the person borrowing, right?
Yeah.
But if you think you can pay for it, then here you go, here's the loan.
Yeah.
So,
so the phrase they use is back then it was borrower beware, whereas the last 2 years after the Royal Commission it was lender beware. So all of the...
Now, I did call this, and you should remember this because we had this conversation many times when these new measures came into place. And I said that it was an unsustainable level of lending.
Yeah.
It was halting the economy. It couldn't last. And I said that...
So just to clarify, you mean since the changes came in and they restricted lending after the Royal Commission?
Yeah. My example and that example that you just went through are two examples of where I'm already paying the money. I will be paying less money, exposing myself even less, yet under these rules I can't do it. I've got a 10-year track record of me doing it.
And the irony of the thing is that at the exact same time, part of the system that changed too was they went to a thing they called risk-based pricing, which came to interest rate. So obviously anything that would mitigate risk or make risk less for the lender, the person lending you the money, you were supposed to get a cheaper interest rate. So what you're explaining is that you are trying to actually refinance in a way that mitigates risk, so makes it less risk for the lender, but you were unable to do it.
I was unable to do it. Now, good segue that you just said, because so what I predicted was that the banks could, to a point, hold the Australian economy to ransom.
Yeah.
Let's take the asset review very literally, and let's go super conservative, and let's see how you like it. Now, before COVID hit, it was hard out there.
Yeah.
Okay. Now, if you really think back, less construction, less car sales, like everything, all the things that I was exposed to were in decline.
Yep.
And it was very hard to make a move, like even when I tried to finance this place, like no one wants to touch you. So I said that they would they'll hold you to ransom until the laws flip back in the other way, benefit the banks again. Because banks aren't making money either while this is happening. So they might be cleaning their books up, but that will take a massive hit to their bottom line.
100%.
So it's always going to swing back.
And again, before all the bank haters go off about them going like, because you see the stuff all the time. They go, they can afford it. Like, they make so much money. What a lot of people don't realise, if you've got superannuation, a lot of the superannuation in this country is invested in the health of the big banks.
Yeah.
So they are massive institutions. They have more control of our government than the government does. Because at the end of the day, like you said, they
hold the purse strings.
Yep, they can put the brakes on the economy, which means if everything stops moving, you're paying more welfare. You're paying, your people don't back you anymore.
No
so
business investments, so there's less opportunities for
everything
jobs.
stops.
There's no growth.
Yeah.
So all those things.
So, but that's the thing. The banks do need to be healthy because most of your super that you're hoping will be your retirement nest egg is invested in the big banks in Australia.
So I had kind of said that it was unsustainable. This is what they'll do, and then they could pick a moment for it to flick back in the other direction. COVID has been the perfect excuse because now we're saying, well, give us some help, banks, to boost the economy. And they can say, okay, we'll do that, and as a favour to you, we'll just go back to the old rules, loosey-goosey, wild, wild west, wiki, wild, wild west, and then we'll just loan to everyone.
And it's intelligent too, even from the government's perspective, to do that, because they have stimulated our economy for the last 6 months through JobKeeper and JobSeeker and all of the other investment bonuses and all that sort of stuff. That all costs money. It all costs the government's money. So it makes sense from a government perspective to loosen the regulation on lending so that the economy can start moving forward at no cost to themselves.
Absolutely. Yeah.
And therefore the Australian people at the same time.
So now, here's the other marker that we need to look at. Because if I had to guess, I would say that the banks, they're smart and savvy business people, they're going to get a better deal than what they were on before. Now, how do they get a better deal? I think they get a better share of the rate. So the intermediaries, the people selling their money, they've been well capped at the moment, like after ASIC. They've had their income reduced, to a third of what it was before?
Yeah.
A tenth of what it was before?
It's probably a quarter. Like real figure is probably a quarter.
Okay. I bet you, and I'd be willing to wager, that part doesn't change, and the banks now get all the additional rate that's sold.
So this is something that's interesting, because it's a very, very good point. And I already saw that a bit when we were lending money. So when you're lending money through a dealership, you are an intermediary. So what that means is, because it's not your money, the bank sets the loopholes that you have to jump through to be able to lend the money and the rate that you can lend it at.
The criteria.
That's right, the lending criteria. So what was already interesting for me with the banks stacking it for themselves, number one, on overall, rates went higher on at least car loans. Like home loans, everything's come down. But on car loans through dealerships, at least from what I experienced, because the lenders were setting the rates now with this new risk-based pricing system, overall, I saw a bump in the interest rates. They all went up.
Yep.
But the level of income that dealers got paid for writing the loans, like we were saying, was about a quarter of what they were getting paid before.
So the banks win there.
So the banks already won there, right? Now, what was even worse was because you're a third party, like an intermediary, if you as a client, went straight to the bank that you're trying to lend, like borrow the money through a dealership, a lot of the time the process was easier and the rate was better. Because it's their money and they can choose to lend it to whoever they want, whenever they want to.
Yeah, it was almost a disincentive to do that before.
Yeah, exactly right. So it was sort of like, in a way, it was sold to everyone of like, it gives the consumer more buying power and more shopping power, which it did to an extent. But a lot of it, perceived shopping power, but a lot of it just funneled people back towards the banks anyway, because if the intermediary is giving you 7%, but the bank's going to give you 5%, well, you're going to end up going to the bank, aren't you?
Yeah. So I would be interested to see what it looks like for those brokers and intermediaries in between, because if I was a bank, I'd be like, new deal, this is what it looks like, and I'm going to make it a better deal than because I need to get a return from my shareholder. I'll just look after your superannuation funds. This is the way that we do it. And the asset review said that incentivizing intermediaries the way that it was done before was not good.
That's
not
right.
good for the client.
Yeah.
So the banks will take that away. So that's my prediction. So I'd like to see when this...
Look, it'll be really interesting.
But what I would say, it was awesome living in those times.
Yeah.
And I've never defaulted on a loan.
No.
And I've racked up debt before and paid it back down, and I've already proven that under the new criteria I'm a bad egg, even though I'm currently paying it.
Well, see, what's interesting about you, not to get too personal, but you have a stellar credit score.
Yeah, it's
stellar credit score. It was over 1100 or whatever.
Yeah.
Stellar
almost as high as it goes.
Yeah. Your stellar credit score, never missed a repayment on any loan, and you've owned your properties for over 10 years.
Yep.
Never missed a repayment on anything.
Yep.
And we're trying to improve your situation and mitigate your bank's risk, and you weren't able to do it.
I know, it's atrocious.
It's insanity.
It's atrocious.
Yeah, doesn't make any sense.
And I'm almost like, a small part of me was like, well, how the hell did you give it to me in the first place? Now, it was ridiculous. I bought just before the peak of the crash.
Yeah.
So I bought at the very, very top of the market. I paid 9.89% was the interest rate when I got in. It was huge, right?
Yeah, yeah.
But I had to come up with a 3% deposit. And
was lender's mortgage insurance a thing back then?
Yeah. I paid lender's mortgage insurance, which is an absolute sham.
People don't realise what it is.
It is ridiculous to think that. So that's not for you.
No.
LMI is not for you.
Yeah, the hint's in the name. It's lender's mortgage insurance that you have to pay for.
Yeah.
So people don't realise this. So let's quickly tell the people.
Yeah.
So lender's mortgage insurance, obviously. So normally now to get a home loan, you have to have 20% deposit. And why do you have 20% deposit? It mitigates the lender's risk. Because what happens is if you default on the loan, they can repossess the asset, and in a fire sale, they can
Recoup their money.
They can recoup their money because they know they can at least sell your house for 80% of what you borrowed.
Yeah.
As long as you put 20% in. So if you don't have 20% deposit, a lot of banks will pick up your loan, but you need to get a thing called LMI, which is a very, very expensive insurance. Which
I think is it 10,
it's
11,
based on
12 grand?
It's based on percentages and stuff. But like, I mean, look, I looked into it when we bought our house, and it was like 15 grand or something like that. So we ended up just saving and stumping up 20%, which I'm so glad that we did.
Yeah.
So anyway, what lender's mortgage insurance is designed to do is if you default and they have to fire sell your house and there's a gap between what they can get for it and what you owe them, that insurance will pay them out that gap. But people don't realise this. You're still liable for it.
Yeah.
You're liable for that gap. So you get no protections from that insurance. Nothing.
Yeah, it doesn't protect you.
And
you'll still get shit listed on you.
You get shit listed on your credit, and you're still liable for this gap, which most people are probably going to have to get an extra loan just to pay that off.
I don't think you can. Oh, yeah.
Right?
Well, dude, there's an opportunity for the banks. Get rid of LMI.
No,
you want to help? Get rid of LMI.
No, the real opportunity is sell your own LMI policies if you're a bank.
Yeah.
Let's be honest, that's what they would do, and I'm sure that many of them do already.
Probably.
Yeah.
Probably. But yeah, so that it was a very prosperous time living in Australia, especially on the Gold Coast.
So
the Gold Coast was absolutely flaming.
So this brings me back to something else though, which I've always found very, very interesting. And so we had a bit of a European upbringing, right? Dad's Swiss. And our upbringing, Dad was always like, if you want something, pay more to get a good quality item.
Yeah.
That you will hold for long term, not this throwaway cheap shit.
Yep.
And I've always sort of had that mentality. And one of the biggest problems, so if you go back to like pre-2006, right? So, the economy was booming. Housing was going through the roof. Obviously, everyone in finance was making bucket loads of money. Dealerships were making bucket loads. Every industry was making bucket loads of money. A few things changed during that period, I think. Not only like global financial crisis did this major issues, but in Australia we've got this mentality where everything needs to be the cheapest. And the problem is that we're so intent on, so I think we've got a deep-seated part of our psyche which we don't want to be had. We don't want someone to take advantage of us. So what that means is when we go to buy things, we always want to haggle, we always want to get for as cheap as we possibly can, we always will price shop, and whoever's got the best price, that's where I'm going to go, that's where I'm going to spend my money.
Yeah, price is the primary motivator.
Price is the primary motivator. Now the problem is, that means every single industry struggles, because the margins they make on their individual product or service is much lesser, which means every industry has to produce more to make the same or less money. And that's a mindset issue which I don't see changing. And that's the problem. If everyone paid 5% more for everything, everyone would be making more money. So you would have more expendable income to then go and buy things that you wanted to buy. But
it's hard to justify it that way. I agree with you. I think that we have a very cheap mindset in Australia. I think that people aren't willing to pay for quality. I think it's called like the $500 boot rule. spend $500 on a pair of boots that last you 5 years, or spend $100 on a boot 10 times.
Yeah.
I think that it's a false economy to say if everyone just spends 5% more, then you'll be 5% better off. Yes, it's true, but there's no net benefit. What I would say though...
Just tell me though, so when you were selling cars back then, were people haggling hard when the economy was going good?
Oh, they were. They were. But I think cars were more expensive then.
Yeah, and had bucket loads more margin in them as well.
It was the noughties were not a great time for cars. I don't think cars were, in my opinion, the best cars ever sold in modern times was the early 90s. Just before the previous GFC, the best quality, early 90s European or Japanese cars were amazingly built, but they were the most expensive that you could buy cars in relation to what you'd earn at the time.
Yeah, and probably what things like property and stuff were worth as well.
Yeah. Like I had a '93 Jaguar Jaguar Sovereign that in 1993 was $150,000. Well, you could buy a house on the Gold Coast for $40.
Yeah.
So whereas now that's now a house on average is say $500,000 or $600,000. So that's like making that car a $2 million car. But what I would say is I think the smart people will be more savvy with it when it comes to purchases. And savvy, I don't mean cheaper. I mean putting the cost of ownership and disposal of that thing into consideration as opposed to just the purchase price.
True.
I think there's a lot of mental benefits too from buying a high quality good at a higher price that's going to last you longer and be worth something when you go to get out of it. And I use the RM Williams boots. It's probably one of the best examples. Like, if you don't know, I think it's the car salesperson's footwear of choice. Because you're walking on hot pavement all the time, going through workshops, the soles just eat out.
Yeah.
If you buy a set of $100 Julius Marlowe shoes, they'll last you 1 month.
Yeah.
And I have a hole straight through them. You can go buy these RMs, they'll last 2 years, and then you take it to a cobbler and they replace the sole on
soles, yeah.
So
right.
you keep the same leather for, in effect, forever. Some people keep it forever.
Yeah.
Now, it's a $500 boot up front, but in the first year, you've already paid it off compared to what the cheap version is.
Yeah.
So if you took that $500 boot approach to phones, to renovations at home, getting a quality builder as opposed to someone on Airtasker that's just roguing it, trying to cut corners, getting unlicensed people to do it for cash. Like, if you follow some correct pathways and take in consideration the ownership of that item, not just the purchase price, I think you'd make the smarter decision. And I think in the end, you'll be far better off.
Yeah, for sure.
So, we used to see with cars all the time. How come you go have the worst experience in the world, the salesperson could provide the worst service, they could be an absolute prick to you, but if they're $100 cheaper, they get the business.
Yeah, I know.
That's
and then
insane.
you'll complain about it too.
Yeah. So
the thing that I saw a lot before I left my last dealership was had a particular saleswoman who was the best service. Newer shit has been around those particular types of cars for a long, long time, and just super nice. Never got rattled. Gave great service. Now, not the strongest closer, but still very good, but not the strongest closer. Because there's two parts to sales which a lot of clients don't realise. There's selling and there's serving. And they're two different things. And the problem is, customers want customer service. That's their number one.
Someone pay for it.
They don't want to pay for it for a start. But also, what a lot of customers don't realise is there's a balance. There's selling and there's serving. So when customers go into a highly service-oriented sales department or a salesperson, they get great service. And one of the reasons why they feel like it's great service is because they don't feel the pressure of being closed.
Yeah.
So then what do? They leave.
Yeah.
They do their price shopping. And then they run into someone who's just all sales, who just crunches them, does whatever they need to do to get the deal, gives no service, but you know you like you said, you might get $100 off. They buy the car of this person, they go and pick it up. This person gives them no run through how anything works. They might not be from your local area or something like that, so they know that you'll never come back ever again anyway. And one of the most frustrating things to me, and I used to see it all the time, is when that client then rolls back to service person number one,
where they feel comfortable,
and they go, oh, you know what, you gave us the best service, you really helped me find out that this was the right car for me. Can you just give me a quick run through how it works?
Yeah, it happens all the time.
Oh,
it's
give
me $500.
Yeah.
Well, you mentioned it when you got your awning done, and I was having a conversation with a friend of mine this morning. We were talking about what he wanted, some large political change. He's not happy with the two political party, and in my opinion,
did you watch the presidential debate?
No, I didn't. I don't want to get involved with their stuff. but our system is flawed. But I don't think there's much you can do about it because the system is literally designed that way. So, but I'm an optimist, and I always try to come up with a solution. And I think one of the best things you can do is localize your efforts. Now, what I would really like to see is a bit of, we joked about Randism, Ayn Rand, you know, and her philosophy was that you would look after your community.
Yeah.
So in her world, there's no federal government, there's no state government, there's just local council, and your tax money goes straight to the local councillor. So if you want a new road out the front of your house, you pay for the road out in front of your house with the people who share that road.
Yeah.
Right? Now, how do we do that in a practical sense? I think it all stems back to, like, a healthy community starts with good education, right? So let's say, for example, you had a school that even if it was a public school, if it wasn't getting the results that it wanted, maybe because it doesn't have the infrastructure there. Well, a really practical thing you could do is give some money to that school in your area to try and improve the outcomes for those students that are inside the school. Because when they come out, they're going to be in a better, they're going to get a better job, they're going to earn more money, they're hopefully going to have the same sort of mentality that you do, and then you're tipping even more in, and you're actually going to lift
the community improves.
Yeah. Now, what I get a little bit frustrated at is I think these community projects that people put on, they think too small. A veggie patch in a community centre. Yeah. It's a fluffy idea, but it's not fixing major problems. I think we have this perception that we just want to wait for the government, the council, to do something for us, and we're going to lobby in it and try and use that system. But I don't think the system is that fluid. Look, so let's do it ourselves. So, you know, if you needed a new road, how about you wrangle everyone together, you fix it, and you pay the local handy people that are there. You give them the money direct. They fix it. They spend the money within the community as well, and it's that net benefit.
And you know what the thing is too. Private people will get these projects done for cheaper than the government will every single time.
Or that dollar, you know that dollar that you give to that person direct, that person's getting $1. You know, if you give $1 to your council, 10 cents of that's going to come out, and then the job's going to take 10 times the amount of
I mean,
time.
like, realistically, what I would like to see, if you were going to make massive change to government, is federal and local, no state. So, Amanda's school teacher, one of the best examples of it. Like, they've only just, a few years ago, gone to a national curriculum. But if you move into state, you have to go through a process to get your teaching license or whatever it is, so you can actually get a job as a teacher in that state. Like, you could go to any university in the country and get a teaching degree, but you have to jump through loopholes when you go to different states. Why? That doesn't make any sense. You know, we talk about how far behind Australia is on a world scale when it comes to education. Well, one of the reasons why I think it is because we aren't uniform state to state. And that's something
we are creating hurdles between
100%. And the problem is too, like we mentioned on the podcast before, the more people that you put into a chain, the more times something can go wrong. So when you've got, like, I don't think state can look at anything close enough, like your small community projects, to actually have enough input and know what's going on there, right? So if you've got local government and then you've got federal government, because there's some stuff which is just federal.
Yep.
National defence, that's a federal thing.
Yep.
That's not a local
Yep.
government issue.
Agree.
Right?
Yep.
So stuff like that, I think you need that federal, you need that figurehead. But I think state government, like the bullshit that you see from between state governors and stuff like that, like Queensland's all stoked now because we got the AFL Grand Final. Yeah, whoopie do. Like, who gives a shit?
Yeah.
At the end of the day, unless people like, that's not something that it's not like we've got it permanently.
No.
You know what I mean?
Look at things like vehicle registration.
Yeah.
Why do you have to, just when you cross an arbitrary line on the ground and now the plates on your car are the wrong colour?
Yeah, that's right. And you get fined for that.
Yeah.
Different prices.
And
they're different prices.
Yeah.
It costs you more or less to, and
I think it's easier to apply what I said and invest local than it is to try and overthrow a government.
True, for sure. And I think that comes down to individual mentalities. So that's one of the things that really changed me in my mentality during COVID, was I all of a sudden realised the importance of supporting local business and supporting the people that I know. So like you said, when I got the shade sail put out the back, I did what I would normally do. I went through local guides, I Googled who I could use to do this thing, had someone come out, give me a quote, and normally I just would have gone, I'm too time poor, let's just go ahead with it. But because I had that, that realization of, if I've got a friend who can benefit out of this, like, why wouldn't I give them them money?
Yep.
I know those people.
Yep.
They're my community. I can support them.
Reciprocal business is so important, and I think there's something inbuilt in us not to do that, especially for friends. I don't want it to taint the relationship.
Yeah.
Well, no, if you were expecting your friend to do it for free,
that takes the relationship. That's right.
But you're not a good friend. Like, you should have. I just had a friend tell me before. He said, I've had to do a favour for a couple of mates. Like, they hit me up for a favour, and it literally costs him a day's work. Well, that's not fair.
No, it's not.
You should pay, and you should want to pay your friend to do the work that you're going to do elsewhere. You should not expect him to do it for free.
Because what are mates' rates? Mates' rates ain't free.
Yeah.
Mates' rates are a fair price from your friend that you would rather support rather than someone you don't know.
Yeah, absolutely.
And I think that if you can get that sort of community spirit going, because I think that's one of the things in this day and age which we are divided from our communities. I got to admit, I don't know my neighbours, right? Like, I live in a really nice neighbourhood. I don't know any of the neighbours.
Yeah.
I actually had, this is a funny story. So there was this lady who has moved in just further down the street from us. And this was months ago. So Amanda and I are going for a walk with Nate. And we're walking around, and she introduced herself. So she comes over and she says hello. And
get off my property.
yeah. No, she says hello, we're having a bit of a chat. She's like, talking about the new one. I'm like, oh, okay, this lady's really nice. And then she goes, oh, are you the police officer? And I was like, oh, no, like, I sell cars. Like, literally, soon as I said I sold cars and I'm not the cop,
you're the scum
she
between.
Didn't want to know me. Didn't want to know me at all.
But
haven't spoken to her ever since.
I let everyone know what I do, and I know, I say to all my friends, like, hit me up. Like, I don't care if I'm not selling you something. If I'm helping you out, like, I've got all this knowledge. Use it.
Yeah.
But I'm going to do the same with you. I'm going to ring you up and, like, if you're a carpenter and you know how to bang a nail onto something better than I know, I'm going to ask you.
Yeah.
I'm going to ask you to do it. And I'll reciprocate that. I think we need to utilise that stuff a lot more. But I think we need to think local, but think bigger. A veggie patch is not a community project.
No.
A community project is getting a school up to standard. A community project is getting a road built to reduce congestion. I think when you said about the cheapness, I think we're expecting the system that's already in place to do what it's supposed to do, but we all know it's not going to happen.
Yeah.
So don't whinge about it. Do something about it.
And that's the number one thing is we, as a general rule, we as a population, we're not doers anymore. We're whingers.
It's easy.
Look at the internet. Everyone just whinges about stuff.
Well,
there's a small percentage of people that actually get out there and do something about it.
I'll probably stop on this, but the whinging, the online whinging thing. I just watched a documentary about the Dingo took my baby thing.
Right.
And she was getting roasted by mail. The
Really?
same shit that people would write on Facebook, the same comments were done back in the 80s or 90s, whenever that was. But they had to write it down and post it. So that trolling, that's been around forever.
Yeah,
That shit slinging has been around forever.
And look, I don't have a problem with trolling. I would prefer that trolling because that shows they actually care that much. They're paying for that stamp to put on it, and they're going to the effort of dropping it in the mailbox.
Yeah.
That's more effort.
Yeah, no, that's why I find it more pathetic.
You find it more pathetic these days?
No, because I get it now. So it's so flippant, so easy.
It's definitely more sad, obviously, if someone's going to the effort of...
Yeah, this is what I feel. Here's what you feel.
Well, like you said a few weeks ago about how you write the email and then you take the walk around the block.
Yeah.
Like, should there not be enough time while you pen the letter
you walk it down
between you, like, going through your drawers trying to find your envelope, although if you're this sort of
Where are the stamps?
yeah, like, I've got to buy new stamps before I can send this abusive letter.
What do you mean you got up to 40 cents?
But also, that's probably a benefit of this day and age too, where that person in 2020, that letter gets posted on social media, then tagged and then called out like a twat in front of the rest of the world. So that's one of the best things about social media, I think, too.
Yeah, true.
It keeps people more accountable in a way.
It does. Yeah, it definitely does. I think we'll leave it there.
Yeah.
That's a tiresome one.
Yeah.
That's a tiresome one. But so we've got some targets that we want to. We've got to...
Yeah, so hold me to it. So 95 kilos by 1st of February.
Yep. 95
kgs. Now, to throw it out there, so the reason why I actually got fat, 3 years ago I tore my ACL in my knee. Got surgery 2 years ago, and then just, like, it took me a long time to rehab to a point where I could actually do anything. I can do stuff now, no more excuses, right? So I haven't been sub 100 kilos since I did my knee. So it's been 3 years. So it's time to bring it back.
It's time to bring it back, and it's not going to be done the way that you think. When we went out for lunch after the last pod, we got a beer, you got a pint, and I got a schooner.
Yeah. So I ain't a pussy bitch.
No, you're a fat bitch. And on that, see you next RDO.
Thanks, guys. See you next time.